Hi there, this is Deborah Nash, and I am the instructor of the Legit department here at the Photographer's Element. I'm a hobbyist photographer who's also a CPA in my professional life, or a certified public accountant. Basically, I work with a lot of numbers. Now, this is my first 5-Minute Friday, and I know that it will often show more of a video presentation where you get to see the instructors themselves, which is wonderful because then you get to know the instructors and their personalities. But what I want to talk about today doesn't lend itself easily to a nice video of me just talking, so instead you'll get this PowerPoint presentation and a picture of me on a day when I was looking much more put together than I do today anyway. Today I wanted to talk about a subject that I feel strongly that every single business owner should understand, the income statement. Too often I run into individuals who have no idea how to understand an income statement or have any idea of all the information they can really get from their income statement. Yet if they did, it would be an incredibly powerful tool to help them run their business. Since this is a 5-Minute Friday, we'll stick mostly with the basics, but I did want to provide you with an overview. The income statement shows how much money your company has made over a period of time. Most commonly, you'll see an income statement for a month, say the month of April 2016, or for a year, like January to December 2015. The format of an income statement is pretty standard, with revenue at the top of the page, followed by your expenses. Your net income, also known as how much money you really made, is shown at the bottom. Let's dig a little deeper into each of these. Your income, or your revenue, it can be called either term, is the amount of money you received over a time period for your photography services. A detailed income statement can provide you with even more information than that, showing how much money you receive for each type of photography service you provide. For example, if you shoot engagement photos, weddings, and family sessions, your revenue should be broken down by those categories to show how much money each type of photography is providing for your business. Expenses are amounts that you have to pay in order to run your business. It's sad but true that you always have to spend money to make money. The expenses portion of your income statement should break out the amounts you spend into categories so you can know how much you are spending on each kind of expense. For example, your website hosting fee should be shown separately from your purchases of prints and albums, and separately from your office supplies. Now, just that level of information would be helpful as you run your business, but your income statement can and should provide you with even more by providing a breakdown of your expenses into two types. The first of these is cost of goods sold. Cost of goods sold expenses are amounts that your company paid that were directly tied to providing specific photography services. For example, if you purchase prints for resale to your clients, the amounts you paid for prints are cost of goods sold. In that case, you could know that you purchased those prints specifically for the Jones family session. Similarly, if you travel to a particular place for your client, like say a destination wedding if you would be that lucky, those expenses would go to cost of goods sold as well. If you subtract just your cost of goods sold from your total income, you get something called gross margin. Now, why does this even matter? There are a few reasons, but one of the most important is that it can help you with your pricing. Your income obviously has to be enough to at least cover the amounts you're paying to directly provide your services. If your gross margin is 0 or close to it, you will know that you need to either increase your prices or you will need to find alternate cheaper ways to provide your services, like maybe buying prints from another supplier. If you don't, you will never be able to make money through your photography services. Okay, now business expenses. These are basically everything else that you pay for to support your business, but these amounts aren't tied to one specific client or session. For example, your insurance, web hosting fees, or software purchases are things that you need to run your business, but there's no way that you could say that you bought your insurance just to help the Jones family session go smoothly, or to make the Smith wedding happen. If you subtract these business expenses from your gross margin, you get your net income, which is the net amount of money your company really made for providing photography services after paying for all its expenses. In other words, this is usually the amount you have left in the bank. Again, if this number is 0 or close to it, you'll want to look at your pricing to see if it's high enough. If your pricing and cost of goods sold are under control, then you know to look into how much you're paying for your business expenses to see what you can reduce or cut out entirely in order to make money. Okay, hopefully that short intro to the income statement was helpful. There is so much more you can do with this information. For example, you can compare your income statement from month to month to see how it's changing, or you can look at all of your expenses as a percentage of revenue to see whether they seem reasonable. Really, we only scratch the surface, but hopefully this overview will help you understand at the very least the basics of what you need to know as a business owner. If you have any questions or if you'd like a deeper dive into this information, let me know. You can email me questions at Deborah@thephotographerselement.com, and I would love to help you out. Thanks!